Welcome to the Voice of MPE, the official podcast of Merchant Payments Ecosystem, Europe's largest merchant payments conference. Today, we are at the 16th Annual MPE Conference, MPE 2023. This podcast brings you interviews with payment industry leaders and professionals from the entire payment world. For more information, head over to www.merchantpaymentsecosystem.com. Today, we are at the MPE 2023 conference on day 1, session 3, talking about acquiring 2023. Mark Waring, the moderator of this session, is talking with Peter O'Halloran of Fiserv, Diana Carrasco from Lloyds Banking Group, Francesco Borelli from Arkwright Consulting, Tina Fenimore from Fexco, and Marissa Salette from Selecta. Listen to their conversation and learn about new payment platforms and marketplaces, tools for merchant acquiring success, and how acquirers can help merchants to survive the recession.
A little bit about them. Diana is the Managing Director for Merchant Solutions at the Lloyds Banking Group. She's a Madrid-born Londoner, and she has 20 plus years experience in the payments business. And she has been a leader at different companies prior to that, at Servired, Visa, HSBC, and she is also a non-executive director at Wirex. Tina is with Fexco. She has 15 years experience in the payments business. She started as a relationship manager. She spent time learning what merchants need, moved up to product to bring the Fexco DCC innovation to merchants in Europe. And currently she oversees Fexco's European acquiring team, which focuses on dynamic currency conversion for the market. And we have Francesco Borelli, who is a partner with the Arkwright Consulting Group. He focuses on strategy and payments and digital banking. The areas he covers are EMEA, APAC, Latin America. He is also a learning coach with INSEAD, their executive education program running strategy, digital transformation, and fintech programmer. So very interesting. Again, we're going to take questions up here, but the first thing, okay, you can see the slide behind me and over there. I like this for a couple of reasons, and this is Tina's contribution, so I'm going to ask Tina to speak to this. But what I like about it is it's data that helps makes data-driven decisions. You heard Peter and Marissa talking about using data insights. That was information coming from product transactions. This is data coming from a different source. Do you want to just comment on that?
Yeah, so
what folks are looking at here?
Thanks, Mark, and thanks for putting this up and giving us the opportunity to talk through it. It was an independent research that we conducted globally that we felt was really important to show the picture of DCC, MCP at Fexco with merchants and consumers alike. So it was giving the full picture, if you like, of everything that's happening in the marketplace to do with Fexco multi-currency. I think possibly the best way of describing it and looking at how it fits into the marketplace that we're working with today in 2023 is I was recently traveling through Austria back to the UK with some friends, and one of them picked up a bottle of perfume. They wanted to pay for it. And it was, and she was like, "Isn't this the thing that you do?" When we got to the payment screen, I was like, "Well, you can describe it as a thing if you want. It's something we talk about day in, day out." But it gave her the opportunity. She's like, "This is cheaper than at home. I like this. And she very quickly went through the process, paid for it in pounds. And it was really interesting to kind of stand back and watch this experience real time with a friend. You know, in there, right there, 79% of consumers, it drives brand loyalty, this particular VAS option. It gives them comfort and clarity during a time when people are really being very careful about how they spend, what they spend. They want that transparency. And I think possibly in some of the discussions you've been having this morning, you can definitely see that that's consumer driven in 2023. And then on the flip side for merchants, you can see there is 82% of merchants find the product positive. And on top of that, something that's a real bonus is that once they implement this product, it grows business by a further 11%. So just from that experience that I had in the airport, this is how popular and important this particular VAS product is, and it quickly becomes for acquirers. Behind your own independent gateways, the second biggest earner.
Yeah. I like it again because of the data and the way it's presented there, because you go on the right side of the screen there, and you are on the on the right side, and you see this is something that consumers want. And then on the left side, you see it's something merchants can do it, and merchants benefit from it. They actually see a lift in terms of their transactions. So it's sort of a win-win. And this is the sort of thing I think is going to have to be a theme in 2023, making very focused decisions and making sure that they're data-driven out there. So again, before we get some questions, I'm going to just ask one to the crowd there, and it's in the vein of payments innovation. What's that going to look like in 2023? There's a lot of concern out there that there may not be enough investment or at least enough resources allocated to bringing new things to the market. Is that something new? Is that something we should expect? Is that a trend? Or are we going to see no innovation? Are we going to see less innovation? Or are we going to see the same amount, maybe just different type? Diana, you want to take this one?
Yeah, I can take that one. I think for this year, next year, and probably the year after, we're going to be constrained on how much money we have spare. So that doesn't mean there's not going to be innovation. I believe that there's still going to be innovation, but innovation is going to be more focused. We're not necessarily going to have the privilege of investing in things for testing, exciting things out just because it's cool and we can do it as we were doing before. But we will have to innovate because it's in times of crisis that you actually need to focus on doing things better and doing things right and doing the right things. I think for the near future, innovation is going to be focused around the channels. Maria from MasterCard said this morning in her opening presentation, we're now saying omni-channel on steroids. And except from very specific verticals where the channel is very much a channel with face-to-face, I think that she's absolutely right. And I will even take it a step beyond that, right? We as a human beings, we like our labels. So we need to feel, and in payments is the same. We need to feel that we can control what we're doing, but naming it. Is this face-to-face? Is this mobile? Is this online? Is this e-commerce? But it's not e-commerce because it's in store. Maybe we need to forget all that and even forget the term omnichannel and start talking about connected commerce because it doesn't matter anymore. It doesn't matter for consumers. It doesn't matter for merchants. They just need payments to work wherever, however, as a given, and for payments to be connected to other services as well, to anything that merchant needs for them to be able to manage their business, from loyalty programs to making reservations online or, or booking a slot in a dentist clinic, right? So I think that innovation this year is going to go in that space, in making things easier for consumers and merchants, making those 3 seconds versus 10 seconds, that services that you really need, because without them, your life is way worse. And that sort of omni-channel on steroids, so that connected commerce, as we call it, and investing in technology that will bring all those experiences together in one big thing, connected commerce, omnichannel steroids or whatever. I think that's
one platform delivering everything.
One platform running everything, but also one provider helping with everything. Not everybody, so not the provider providing everything, but the provider connecting everything. So merchants know, who wants to go to 3 different, 7 different, 10 different places to get, that's the value of the supermarket, right? Rather than have to go to all the independent stores. For some things, you will still want to go to the specialist store, but you also want to go sometimes, because it's convenient, to one place where you can get everything, even if it's provided by someone else. And that's the value of the gateways in the end, right? Being that connector of all the different potential services, software services, even hardware services that can connect, integrate in a unified, connected solution.
Interesting. One reminder, again, if you got some questions, you want to use the app, the Slido function, we'll be able to see it up here. The connected commerce, that's a very interesting concept, and we're seeing a lot of that in my part of the world over in the States, where these different platform companies, these kind of guys who go out there and they basically provide business services, B2B services. They automate a number of services across the board for all different types of verticals out there. You name it, auto, retail, restaurants, marketplaces, plumbers, pest control guys, you name it. It's really a fascinating thing. And I wanted to ask a question of Francesco because he's authored a I thought it was a very impressive study that is on the website, his website out there, about these platforms that are creating their own ecosystems out there. They're bringing different kinds of solutions to a single merchant or to the merchants who board with them, but they're solutions not just under their own brand, but they could be coming from others as well too. Do you want to talk about that? Because I've got a couple of questions. First of all, just tell a little bit about what they are. And are they going to be displacing or disrupting the traditional merchant sales channels? Is this where the new merchants are coming from?
Okay, so this is a Pandora box type of question. Platform and ecosystems, to begin with, are two different business models. The platform is practically a broker, where an entity in between is connecting two groups or multiple groups of different entities facilitating a transaction. Typically, a platform is just facilitating and may not have a part into the transaction. An ecosystem, the easier analogy to that is a super app, where I have a complementarity of different services that are sitting along a customer journey. So it's like a platform on steroid with a single user interface. So to begin with, for those who wants to dig deeper into the definitions, just go on Insert Knowledge, type in my name. There's 4 pieces. One is don't confuse platform with ecosystem, co-authored with Professor Shipilov, the head of the strategy department at INSEAD. Now, that's in terms of definitions. In going back to the two, platforms tend to be ubiquitous, and they're ubiquitous both in the B2B as well as in the B2C type of environment. They are somehow sweeping the globe as a business model evolution, but as you rightly said, on the merchant acquiring side, they started in the US. They're in Asia also. They are pretty well developed, and they're starting coming to Europe. So the Square or Block is starting arriving. There's a lot of others that even European players that now are developing similar type of proposition. They are way less pervasive outside of Asia and some parts of South America on the consumer side. So that's where the ecosystem is way more advanced into other regions. Now, these business models are highly evolutionary. Any merchant aggregator can become an orchestrator. It's just a matter of adding a couple of other extra capabilities. The very second you're starting complementing the needs of running a business with a working capital solution, payroll, and so on, then it becomes an ecosystem of some sort. With the push of software development, the soft POS type of interfaces, we are going to have more and more of these propositions coming up. So they're going to become more relevant. Yeah. But on the other side,
technology is easier to deploy than ever. Yes.
Sorry?
The technology to deploy those solutions is easier than ever was. I did one in Africa. You deploy it in the cloud. You have API, advanced APIs to expose those things. Sorry, go ahead.
Absolutely. No, very, very good point. So on the merchant side, over time, they're going to become way more widespread, regardless of the geography, both for small merchants and large merchants. For the large merchants, the power is still held by the software vendors or the retail hardware providers like the Fujitsu, the Nixdorf, and so on. On the consumer side, instead, the development is going to stay way slower, also because we have to keep in mind about the online commerce is about 25 to 30% of the total, depending on the country we're looking at. So that's where a super app is actually operating. So the remaining 70% in store is not really touched on the consumer perspective.
Okay, all right. One question I have, though, just to kind of follow up, is if these if these platforms are servicing merchants out there, and everybody in the business, one of the big concerns has always been, I need to get new merchants. I need to find new merchants. I need to find merchants, particularly those who may be accepting cash only today, and I can help them digitize. Are these platforms going to be a channel for merchant sales? Is there going to be a way to go out and find those kinds of merchants and bring them, maybe replacing what was kind of traditional direct sales staff?
In many cases, yes. Even if I have to say that the bigger and faster opportunity for that type of phenomena is currently in Asia, South America, and Africa. It's not really in Europe, because in Europe, there's not a lot of unbanked merchants. They need to be terminalized, but they're not unbanked. Like when they're very, very tiny, or the plumber, or they have a movable business and so on. But there are a lot of countries where you see the value-added service, the buy now, pay later, the other type of services that is actually becoming the main value proposition that is sitting on the terminal, with merchants that are asking for it. And it just happened that the terminal is also a payment terminal that can accept almost everything: wallet, mobile, cards, and so on. And that is driving adoption. That, for example, one of the companies that is most successful in running this is GHL System, Bernard, in across Southeast Asia. They've been running and developing 7 different models, starting from being a terminal service provider over time. That's one thing that we are seeing in the acquiring space. There's 2 capabilities that are going to drive success and the winner. The proximity to the merchant. Whoever controls the merchant as the touch point will have a better sway in defining the proposition that the merchant can take. And secondly is the technology capability to integrate. Is coming out of the soft POS environment, to integrate value-added services and proposition to it that is going to make a difference.
Okay. Thank you. We got some great questions here. There's one on DCC. I'm going to ask Tina that question in a minute here. Peter, I'm going to ask you to take that third one down. So start reading that, because that's a fascinating one. Okay. I'll set that up for you there. But first of all, are you going to use some sort of a tech to improve the conversion rate? If you know how DCC works, it's basically a function of a couple of things. It's the number of currencies that you can convert, and it's the acceptance rate of the consumer to say, yes, I will accept the converted rates. So is there anything being done on that to improve the conversion rate?
So the tech that DCC is offered on at the moment is very much the tech that's in the marketplace aligned with the acquirers. So it's a brilliantly simple offering. It's very simple for consumers to use. And definitely as we move forward and as the payment industry moves forward and technology moves forward with it, yes, we're becoming much more app-based, for example. And I can see, there's other questions there about wallets and how does DCC fit in with that? Very much so. So yes, the tech is important, and yes, how it's offered, but DC very much keeps up with that. So as much as the acquirers are moving forward and the technology is moving forward and the merchants want to adopt that, DCC fits very nicely in with all of those, particularly when it becomes app-based POS solutions. Right.
Peter, there's a question out there. Are acquirers another payment dinosaur heading for extinction? Kind of put in grim terms there. Maybe I'm a little sensitive to this. We have a shared Fiserv past here, and I always used to hear that about Fiserv, and I'm going to just say no, they're not headed for extinction. I think Fiserv has done a very good job pivoting and adapting to it, but I'm going to ask you to take that.
Sure, thanks. That's a doozy. So look, no, I would fully agree with you. I think, and I don't know a single acquirer in the world who just focuses on acquiring by itself. Everybody innovates. The key to this is to be a fintech and make sure that you're bringing technology to play. So if we think about the discussion earlier on with Marissa, if we were just a single threading acquirer, we wouldn't have been able to meet the needs that you had. But it was the fact that we could bring the technology, we could do it over 16 countries across cards and alternative alternatives. We could take friction out of the journey. We could increase, improve the speed, dropping the transaction time frame from 10 seconds down to 3 seconds. We could take the chip and pin out of the equation. We could also bring the data insights, which is key. So, you have to think about acquirers in the context of all of that technology that you bring. We have our own POS devices. We have lots of different value-added services we bring. And thinking back to the example I mentioned, and you asked about innovation, will there be innovation this year? Absolutely. We've just launched in Poland the cash-to-card solution. And it's that rare case, actually, where nobody is being cut out of the equation here by the innovation that we've brought, because the banks are actually happy with the fact that the cash is coming in through the retailers, because they took a conscious decision to reduce the number of branches and the number of staff to manage their cost base. But they still want that money coming into the bank account. So the pay away that they give us is a fraction of what it would cost them to run and maintain branches. So the banks are happy. The retailers are delighted, because this innovation is bringing people in through the door, because obviously people come in to deposit their cash. They're using the grocery retailer like a Żabka or an Empik or a Dino or a Makro. They're using them like a bank branch effectively. But obviously when they come in, they're going to buy something. So it's footfall through the door. The schemes are delighted because there are more transactions happening on their rails. So, that kind of innovation wins. But, that's an acquirer in the name of Fiserv doing that. It's, we do far more than just pure play acquiring. And to be honest, all of the other acquirers out there do the same. You can't survive if you're not bringing technology and innovation to the game.
Francesco, did you? Oh, sorry, Dan.
There you go.
Go ahead.
It's such an interesting question, right? So, as another acquirer in the group, I would say something very similar to what Peter has said, but I will answer differently, and I would say yes. Acquirers are dead. Acquiring as we knew it once.
We know it.
It's done. We no longer just process card transactions. That's a thing of the past. We have evolved from being acquirers to become merchant services providers. My team's called Merchant Solutions, and it sits in a broader merchant services unit. And that's what we do. We offer merchant services. Part of those services are payments, and part of those payments are with card. And yes, it obviously in cards with card processing, and still the biggest chunk of what we do, but we're doing way more. We're doing alternative payment methods. We're doing open banking. We're doing pay from bank, open banking. We're doing other services. We're integrating into the gateway all those services as you are doing. You're doing your deposits settling. We are doing there's another question around B2B there. We're doing all these pay by link in the invoice, etc. We're integrating with all these other services because we're a very egocentric industry, and we think that we are at the epicenter of our merchant needs so much that we call everything else value-added services, as they're adding value to what we do as in payment processors. But to be honest, I would like to ask if there's any merchants in the room, is this the case? Do you feel you wake up every morning thinking, I really, really need to spend 8 hours today thinking how to get those card transactions processed and in my bank account? No, that doesn't happen. They have other needs. They have other worries. They have to pay invoices. They have to make sure stock is where it is. They have to make sure that the reservations are where they need to are, that they're not double booked, that their vending machine is up to, it's working, and it's no vandalism associated to this, that this is working and the rate is properly calculated, that all the technology. So it's, yes, acquiring's dead, but acquirers have moved to be something different, right. I believe.
It has to evolve. Yeah, okay.
Yeah, indeed. That would have been my point. Acquiring is evolving quite rapidly as an industry, where one of the final step of evolution is starting emerging with some very large players. It's been typical in Japan, where you have a direct-to-issuer type of model, where retailers negotiate a rate with the issuer, and then the acquirer is practically a switch and accounting and settlement provider. So does specific commodity elements of the transaction life cycle. The same has come out in the US out of the interchange negotiation, where very large retailers ended up going into direct connectivity with the scheme and direct negotiation with the rates there. Now that model is evolving. We got very large PSPs and acquirers in a number of countries, some of them including Europe, that are very close. They are negotiating and close to deal on exactly on the same type of basis. So whenever that happens, the role of the acquirer becomes much more limited as a processor. But on the other side, we have a wave of evolution with large retailers that are taking control of their own switch. They are moving into multi-acquiring. That is opening up a number of different opportunities for players to evolve into the business opportunity, into the market. Now, that is also one of the point of evidence that we got in terms of fragmentation of the acquiring volumes. We publish a report that is available around. It was distributed in partnership with MPE in occasion of this event. One of the interesting pieces is that electronic payments are keeping growing. Like KIGAR is 23% for the 5 years. We got a continuous series up to 2021. Like there's been an even bigger spike in 22 with the pandemic. But if we look at the distribution and the concentration of these volumes, the top 100 acquired by size are growing at about 20% CAGR in a market that is 23. The remaining of the market is going way, way faster. So there's a number of different reasons for that. The speed in adapting business model, the effectiveness of the platform. Majority of platform where they become very big, not all of them, but a good share of them become very clunky. So the type of performance that you have in speed of authorization, number of false positives and things that shouldn't happen that happen tends to increase the more you patch the platform up. So you got an ongoing emergence of very small players that have very agile propositions that come in the market and grab their own little market share. So overall, there is an evolution in terms of, is the acquiring industry going to stay the same as it was? Maybe not.
Yeah. Okay. Here's a question for Marissa. It's if you can read that on the bottom there. It talks about the unattended space. Where do you see potential for growth there? I think that's really a fascinating thing, and you must be looking at that. So,
absolutely.
Without giving away any trade secrets or whatever, what are you looking at here?
Certainly. I mean, when we look at the growth, and we started touching on it a little bit earlier, really the growth is around those fresh food solutions and really creating an alternative for the canteens. It's not only in your private workplaces where you see that a lot of the companies are no longer able to afford having canteen solutions out there, and they don't know how many people are actually going to be in the offices on any day of the week. You also see that a lot in terms of train stations, in terms of airports. I mean, having a hot meal that you're able to take on your train with you. We're seeing as well within the Zurich Hauptbahnhof and the main train stations there, that it's really interesting for a lot of the clients that we're working with, for a lot of the consumers. They want that fresh meal. They want something that makes them feel healthy, that they can really be able to take with. So that's where we really see a lot more of the growth going forward.
Great. There was I don't know if you attended the session earlier this morning when Dave Birch was talking about consumers' choice driving the number of payment methods and the kind of payment types that are offered at time of purchase out there. And he was taking the position, I don't know if he was being just being provocative or just trying to stir the thought there, but he seemed to be saying he didn't think A, consumers cared, and B, even if they cared, we shouldn't give them a choice. Do you want to comment on that? I kind of recall your previous conversation saying that was
exactly
that's sort of the whole thing that proved your business proposition.
Exactly, that's a really interesting take on it. To be honest, I would fundamentally disagree actually with that statement. I think certainly the consumers do care in terms of actually having the different choices and having a payment method that they can use at any given point in time. We see a lot as well. I mean, part of it is the cashless payment opportunities and the different APMs that we're able to bring. I know in Switzerland, I mean, if you don't go around with Twint, you're kind of dead. It's one thing that you absolutely have to be able to have because it goes straight from a bank account, and it doesn't require going through one of the different card schemes. So that's something we know a lot of people only use Twint. They aren't able to go with a different card. If you don't have that, you're dead. You basically can't. You're going to lose a significant amount of your revenue if you don't offer that type of APM. You see the same thing in other markets. When you're talking Belgium, the Nordics, I mean, very much those local card schemes are critical for our consumers. And I'd even take it maybe one step further in our particular case. I mean, there's always the debate around cash or cashless, and that's certainly something that we're continually trying to work on because in a lot of the southern markets, you still see cash as king. Certainly for our level of payments, when you're talking €1 at a time or even less for a coffee, you still have that element of cash that obviously from a merchant perspective has a very significant cost attached to it. You have the cash handling, you have the inability to really track where that cash is. And so it's also on our mind to be able to see from a consumer perspective, how can we bring them so that they really want to have those different cashless methods, and that's where I think the different APMs as well can play a role, where it doesn't just have to be the credit cards that they're walking around with, but another way for them to pay that doesn't have to go back to the coin.
Okay. I think you've got an interesting question here, number one. I'm going to be a little creative here and kind of break it up a little bit here. First of all, there's a question directly about DCC. We're getting a lot of DCC questions. You're going to be a busy person this afternoon. But it just essentially, Apple Pay, Google Pay, the other wallets for that matter, impact on DCC. I'd like to hear you answer that. Beyond that, I'm going to throw the rest of the question just sort of open to the crowd there, to the expert panel here, and just say, just comment generally speaking the impact on the acquiring business, particularly what you see in 2023 relative to the growth of the use of wallets. So, do you want to take the DCC related part of that first?
Yeah. I think, whilst the pandemic was happening, obviously we saw a huge, massive growth in contactless and in particular the Apple and Google Pay apps. But today, DCC works quite happily with Apple and Google Pay. It's implemented with the acquirers and with the merchants and is offered quite simply. So did it impact it? Probably in the beginning, but now as acquirers, move up with how, the technology and the marketplace is moving as they very much are, then absolutely DCC is very much part of that offering. So it's quite simple. Okay.
Anybody else want to comment on just the growth of wallets? Diana, looks like you got a thought there.
Not from the DCC perspective, particularly that's to the expert, but touching on the Apple and Google Pay, I think that this is another example of where we're heading, and we're heading to where consumers want us to head. So we are an industry that focuses on merchants, and often we stop our thinking process with the merchant. This is the merchant needs. This is what the merchant's asking for. This is what we're innovation for merchants, what we're doing for merchants. But we have to make the conscious exercise to go all the way down to the consumer, because anyway, merchants are asking for what their customers are asking them. And that's usually in the B2C model, that's usually a consumer. So Apple and Google Pay is a clear example of, with the pandemic has even accelerated that, it's been consumer driven. It's still card payments, it's still acquiring as we knew it, but in a different format. Now we need to keep our eyes open and our ears in synchrony to keep on hearing what consumers need. And this goes a little bit back to that question you were asking before about innovation. Are we saying innovation stopping? Are we saying what's going to happen with innovation? I think innovation is going to go in the line of helping consumers and helping merchants meet the consumers' needs. Whether that's Apple and Google Pay, it's alternative payment methods, it's deposits in supermarkets, it's vending machine, it's paying in different currency, it's the technology that's behind. We just need to be more conscious that we have a duty with society. I mean, everybody needs to pay. Most of us privately owned companies, but we're serving the public. It's almost a public service that we're doing here, and we have a responsibility to do it right and to do it right for everyone as well. And to think about consumers means thinking about consumers, including the vulnerable, the elderly, the ones that don't know how to, the ones that need to use a vending machine, they don't want to talk to people, the ones that travel. I mean, that's, I think, the background of that Apple and Google Pay question is maybe to be a little bit of Sure.
We got about 3 minutes left. Thank you very much. We got about 3 minutes left there, so you got about 30 seconds if my math is not failing me here. I just want to go down the line, starting with Peter. 2023, success in acquiring means what?
Look, I think for us, it's focusing on a handful of the right innovations. So, and bringing value-added services to our clients, because they're all everybody's feeling the pinch. It's harder to get investment capital out there. It's inflation is soaring. So money. People are being more conscious. I think Diana mentioned earlier. People are very focused on how they spend their money. So we're in that same position. So I think for us, we're trying to help our clients with value-added services. DCC is a great example of one that we do together with Fexco, where we offer that to clients. It's a great way for them to offset their acquiring fees. We also offer gift and loyalty, the cash to card that we offer. It's really, I suppose, trying to find ways where we can help bring value to companies so that they can manage their business, because they've got less funding maybe to play with.
I might piggyback on that. I think the big value for us as a merchant is really to be able to work together to find what are the right areas where we together can bring value to the consumers. Obviously, we have a different perspective on that as the merchant. We see the consumers in a different light and see every day what it is that they need. And so being able to give that feedback and be able to work as a partnership and having that approach is really what's valuable for us as merchants, to be able to bring the acquiring into a different light.
Okay.
So acquiring in 2023, it's going to be focusing on meeting merchant needs, so merchants can focus on what matters to them.
Okay.
I think to summarize what the panel said already, and with DCC, innovation is important, but this is a product that is there now. It's a service that's offered now. It's a revenue stream that's sorely needed by merchants and our clients now. And it also offers branding and awareness and data. So it's very much hitting all the notes that merchants are screaming for today in the marketplace.
Okay. Francesco, take us home.
Okay, so it is going to be a balancing act, simply because 2023 is going to be a tough year. The regulation coming in, the Credit Act from the Commission, that is going to put a squeeze on buy now, pay later. So that is going to change a little bit of landscape. Consumers, as has been said, they are becoming more cautious. It is not going to be as bad as during the pandemic in terms of risk management, the credit risk for merchants, but there's still an element of that is going to come back. When consumers are squeezing, the merchants may not have the same amount of sales that they had before, and where consumers are tight on money, you got first-party fraud coming up, and so it's going to be an interesting balancing act between innovation, closeness to the merchant, and managing liquidity and profitability quite tightly.
My thanks again to Peter, Marissa, Diana, Tina, and Francesco. Thank you to all of you. Thank you to the MPE organizers. This was I thought a very successful, very interesting session that we had here. So thank you for attending. Sorry we couldn't get to all the questions, because there's a lot of good questions that we didn't have time for. But try to catch the folks afterwards. I'm sure they'd love to talk to you.
Thanks for tuning in to the official MPE podcast. If you've enjoyed this episode, be sure to subscribe to the show and check other video interviews with other industry leaders on our YouTube channel. For more content, follow Merchant Payments Ecosystem on LinkedIn and Twitter. Don't miss out on our Positivity magazine, and remember to subscribe to the MPE newsletter at www.merchantpaymentsecosystem.com.